All right, this is Jeff Macke live. I'm Spencer Israel. That's Jeff Macke from the Macke Portfolio. Jeff, I guess we've entered into the consumer portion of the earnings season here. We had, of course, Apple and Amazon last week. This week, we've heard from Uber and Shopify and
Yep.
Spotify and McDonald's and a lot of big names. And as always with you, it seems like there is headlines swirling in the air.
Yeah, they're swirling around my head. And in fact, some of these companies don't consider themselves consumer companies at all, but damn it, I do. And so, yeah, it's been an eventful week, and the phrase that pays, the expression of the week is a bifurcated consumer. We've heard it from bank executives. We've heard it from McDonald's executives. We've heard it from just about everybody, which essentially means the rich people it's like a Charles Dickens novel. You just have wealthy people chucking little silver pounds out to the poor people who are scrounging around picking them up, which is an unfortunate metaphor, but that's exactly what they're saying. They're saying people that have over 100,000, maybe 100,000 isn't what it used to be, might be one of the other alternative explanations. But either way, poor people aren't spending, rich people are. And it's creating all kinds of chaos in the markets. I would say that a lot of these companies' managements are leaning a little hard into it and maybe making some excuses, but we'll get into that.
Well, let's hear from some of those managements right now. So you wanted to talk about what you called the death of slop. Is in this case, is the slop referring to the food in the bowls from the Chipotle and the Cava? Is that what that's
It's all encompassing. It's just kind of everything. The death of places that you pay too much money for just a dump truck full of calories in one big bowl. That was a craze for a while. Chipotle made it work, and that was great for them. With the burritos the size of your infant child, who's probably about 18 pounds now. That's turns out to be a lot of food in Ozempic Nation, as we pointed out before. Kava with the most obvious warning and guide down in the history of the world. I was walking on the beach yesterday just because I've got some time on my hands, and some days the market is just disagreeable. So, and thinking I should be short Kava, but it seemed too obvious. And so, and it was, the stock's having an okay day today, but just a horrible year. And both what these companies have in common, other than just giving you bowls of slop and other than leaving your stomach a little upset after you dine there, is management for both sides just came on and kind of complained about the consumer being wrong and everyone being poor, and just that was what the problem is. Now, who's poor are actually people long Kava and Chipotle. And that's going to continue to be the case until they come up with kind of better management teams. So the bifurcated consumer really means is that stuff that people don't like, they're not buying even a little bit of. You hear from other companies and they're doing just fine. Uber, will get to them. It's they say kind of things are just fine. We'll see. We've got DoorDash reporting tonight. We've got other companies. We've got all kinds of consumer companies coming down the pipeline. But until further notice, rich people are spending, the poor people aren't. And man, it is wreaking chaos in a lot of these stocks. And I'm not sure that that's going to change much until we get some government changes going on. Also heard from McDonald's today, the Golden Arches.
Grimace is what I was doing this morning. They came in below estimates on the top and the bottom line, but the stock's up 2% today. Granted, the whole market's up, like you said. So that's not saying a whole lot. But
which brings them, Kohl's is up 9% today. So it's a good day for bad companies. But is there a better character than Grimace? By the way, just while we're talking about Grimace, I've always felt like there's a trademark suit with the Barney industry. Seems like Barney is just Grimace with a tail, and I object to that just artistically. But they again came up with the bifurcated consumer. Now, are rich people ever eating at McDonald's? I'm not so sure. But maybe that's a thing. But positive comps, and because they have better management team, what they're doing that the Kava and Chipotle's of the world are not, is they're going to where they can make money, and the consumer is wanting their food. So they're not insisting that huge portions are the way to go. They're leaning away a little bit from beef. They said inflation's still a thing. And really, this is where we are with McDonald's now. It hasn't been a great stock this year 4% is pretty abysmal, to be honest. But it is a really good tell of where the American consumer is because they do get a pretty good sample size. Inflation's starting to matter. The shutdown's starting to matter. You got a lot of different headwinds, some self-created, some just a result of the way how the market rolls. But your takeaway here is that if you're going to be invested, you really have to kind of know the management teams. You got to know what's going on in terms of how they're going to go about addressing the consumer needs. But Shake Shack was fine. Burger King was fine. We've had plenty of companies that have come out and reported, cromulent, if not great earnings. But man, the risk reward has been brutal for the teams that miss. And so, what McDonald's told us kind of what we already know, which is, things are not great out there, but they're not terrible. And it certainly seems fixable if we can kind of get rid of some of these tariff and government shutdown headwinds.
I mean, McDonald's actually has been among the better performing restaurant stocks this year. There really aren't that many good ones. I mean, there are.
It has been a savage year for restaurant stocks. I mentioned Shake Shack before. They turned in a pretty solid quarter. That stock has been just smoking, hurling death, which, a lot of different reasons why that is. Again, it's Uber's in the food delivery business as well. And they said, it's that business has never been better for them. So if it's really the case that folks are just not kind of going out, that they're eating at home, then you would see the grocery stores doing better. You wouldn't see consumer staples just being the land of despair that it is right now. You figured that would be good for Kroger's of the world, right? I mean, if folks are eating at home, then they should be going to the grocery store. Nope. That turns out not to be the case. So you would have expected to see slightly better kind of results from the McDonald's of the world as a lower price alternative to Chipotle and everything else. If this was truly just economy driven, I really do think that it's GLP-1 driven as much as anything else. I think people are just eating less.
That could be.
It's as good a guess, honestly. I'd rather have my CEO say that. I'd rather have, if I'm long Chipotle, I would love the CEO to say, it seems like people are eating less. And so we're going to sell burritos that are half as big for half the price. And we're going to see if that works, because that seems to be what our customer is telling us. To yell at the customer in a conference call is the biggest of red flags in consumer land. It's a must sell and figure it out later type of situation.
Yeah. And just one more thing on the restaurants. I'm just looking at just the restaurants as a group right now. So, there aren't that many restaurant stocks, but like I said, most of them are down, are not just down for the year, but underperforming the S&P for the year. There's only a handful, as now my computer freezes. There's only a handful that are actually outperforming this year, and now I can't even see what they are. But
some of which have been good.
Here we go.
The Texas Roadhouses of the world that they were on just screaming heaters for a while, and so they're kind of due for a pause. But the experiential stuff, Dave and Buster's, for instance, absolutely been terrible this year. That was one of my favorite kind of consumer tell type of stocks. Denny's just got bought for a song. So there is a case to be made that folks are not, in fact, going out as much as they did. What McDonald's also said was that the ground beef prices are still a problem, that inflation is, in fact, rearing its ugly head as many people expected it to. And that's why they're serving more chicken. Stuff's getting expensive out there.
If you want to find a restaurant stock that's outperforming the S&P, you have to go really far down the cap scale to small cap land. But let's move on here. You mentioned Uber. They reported the other day. What they say exactly?
They said great things. I mean, I'm long this. I was long calls. My calls are in money heaven, which is unfortunate, but that's just the kind of thing that happens. Maybe that explains why I was taking a little beach walk yesterday, because Daddy was a little upset over the fact that, this company said everything I wanted them to say. It's Uber gets wrapped up in that whole Tesla is going to make autonomous cars and no one's going to use an Uber anymore. Meanwhile, Uber has millions and millions of drivers on the road who are distributing food. They're working with retailers. They're monetizing these people in a million different ways. If you truly have a bifurcated economy, Uber customers, because it is a somewhat luxury item, this is not the cheapest way to get anywhere, and it's not the cheapest way to have something delivered, but it's that is in fact how it's playing out, and people on the lower end are inclined to work there, so that's who they employ. This was a great quarter. It's only 17 times earnings. I had my daughter add Uber yesterday. I actually called my daughter. It was nice. I said, "Hi, honey, it's Dad. Buy some Uber." And that's worked out so far. It hasn't worked as well as it should. I think this stock should be kind of drifting higher. I think they will. It's just a matter of time, really. They win so many different ways, and it's such a good company. It's such an underrated, kind of misunderstood operation. But they're not going to get waylaid by anything. I absolutely it was the antithesis of yelling at the consumer. They went out there. They were one of a handful of companies. We're going to go through them right now that reported pretty terrific results on just an absolutely dog crap day yesterday. I think all of them would have been higher if not for just the market that we had, and I think that's created some opportunity.
That's one of the secrets of earnings reports is sometimes the reaction is dependent on the day you report, and it's out of your control. If you report on a good day, then good for you. If you report on a bad day, well, tough luck. Better luck next time.
Yeah, let me tell you what a bad feeling is. If you're long Uber and Spotify and they're both set to report, and you wake up and the Dow futures are down 400 points, that sucked. That was hey, my day's ruined, and I just woke up. That's no good.
Better luck next time. Speaking of Spotify, it's kind of the same story, right? So here's a chart, and the report was good.
It's a little scary chart, actually, and the report was good, and it was terrific, actually. They're still a growth company, and they kind of get cast in that same, I've called them the Swedish Netflix, or maybe it's my fault a little bit. Netflix was a little disappointing. They're chasing content. Spotify is going through a management change, but it seems to be pretty seamless. They seem to not be changing any policies. They reported great numbers. They reported decent subs. Their ads weren't that strong. But as we've mentioned, it's not a terrific consumer market. So why would you expect the advertising to be taken off? I'm being shelled by biplanes right now. I think Snoopy just rode by on his doghouse, if you heard that around. But we're fine. We're fine. There's no shots fired. But they broke the 200 day. I need these guys to get back over the 200 day. I love Spotify. I'm long Spotify. I'm a user of it, and I think they're doing all the right things, but nothing good happens under the 200-day moving average. And they lost it yesterday despite a beat. The stock was higher early, and then it just got weighed on by all the folks who just kind of have to sell when the futures are lower and when the market's getting killed. And so it was an unfortunate turn of events. The stock has marked a lot of time. It's kind of one of my favorites, but maybe it just needs to digest a little bit.
Yeah. All right, we're going a little out of order here. Sorry, but since we're on the topic, we might as well go to Shopify.
It's very much the same topic because it's very much about the risk reward. This was another super solid quarter from a great company. This stock's the chart is not broken really at all. It took 7% out of it though. A tough day for the longs, but that's not so bad. If you look at that chart, that goes from 100 to 175 there since May. So, stop whining. I mean, you get a little slap on the head in my house if you whine like that and you're making that much money. So it's Shopify's fine, but I think the bottom line on these three is you've created a couple of values. It's been really hard year to find many values out there in the market because it's the stuff that's been working has just been running like a scalded chimp all year long, and you haven't gotten many entry points. Shopify being one of those. Uber, it's still up 35-40% for the year. So that's been great. Spotify's chart concerns me a little bit, but this illustrates one thing that we've heard from earnings so far. I had Pinterest in here before it was too ugly to even keep in there, but man, down 20% today. The risk reward has just been kind of crappy over earnings season. If you get a win out of it, you're going to make 3-5% maybe. You haven't seen very many non-AI related 20% rippers. And man, if you miss, they will take your stock out back and they will shoot it. They will beat it like a government mule. They will hit it with a stick. They'll do all kinds of horrible metaphors, none of which you want to apply to your portfolio.
Yeah. So like as an example of that, Uber has a great report, like you said. And I mean, today it's down 1%, but it was down
10% at one point yesterday. Right. And you're trying to figure out how it is, and people dig into it, and the press being the press, because I can tell you this as a former television professional, one thing you don't do when you go on TV is say, I don't know. Jeez, Uber beats the hell out of me. So you start digging around for why that is. They were a little light on EBITDA, which would matter to me kinda if they, it doesn't really matter to me at all.
My point was Uber good report down 1%, Pinterest bad report down what is it,
21% and not even wiggling. It's down and being slaughtered. And the reason we're doing this is not just because it's fun to chat about it, but we have other reports coming up today and tomorrow for the rest of this week that are gonna matter. We've got Robinhood, which we didn't talk about before. Sorry to spring that on you, but that's obviously just kind of what people are trading, what they're doing. Peloton reports. Dutch Bros is a really interesting one here. That stock has been just horrible for this year. It's had a great run going into this year, but very much overlaps with the Chipotle of the world. It's taken share from Starbucks. It was $70 after they just beat the living snot out of earnings 3 months ago, and then it crashed. So you can see there, it gapped higher, gapped all the way up to 70, and now it's at 54, which, if I'm doing the math right in my head, is much lower than 70. And so I'm not sure what they're going to be able to say tonight that's going to appease kind of the market gods. I do think that they'll probably report pretty strong numbers, but there'll be a good insight. This is a customer base where they skew younger than Starbucks. Starbucks folks tend to be more kind of my age. We're aging out of the sector a little bit. Maybe we don't go out for coffee as much as we used to. But Dutch Bros is a younger operation, still growing earnings much faster. And so this will be an interesting tell for tonight. And I'm not positive there's anything they can say that's going to get really the market all that giddy about what's going on at Dutch Bros right now.
Dutch Bros has had kind of a bizarre history as a public company, right? The stock, has had kind of a bizarre history. They've basically had like 4 or 5 massive up months. And other than those 4 or 5 months, it's kind of been a crappy stock.
Right. Just a lot of grinding, lot of grinding, but it's a really nice business model. And they're growing by kind of going from area to area, and they build out within those regional groups. They do some franchising, some store operations, terrific comps. They don't have that negative comp we saw from Starbucks and Chipotle. They use the magic of inflation to get their comps back to zero. They're like fewer transactions, but boy, our comps they were positive, and it's like, congratulations on taking credit for inflation. It's boy, the cost of living is going higher and you're part of that. So got your comps back to flat. Dutch Bros is actually getting their comps. People still wait in line to buy coffee that I literally can't taste it. Have you tasted baby food? This is not an unrelated topic, but
no.
You've never taken a little bite of it, like the peas and carrots and stuff. It
I
seems like it
that
should
I
be
will
tasty.
in the coming months, but I have not yet.
Oh, okay. Oh, so you're not there yet. Yeah, trust me. You'll open it up and it's like, peas and chicken. Who doesn't like that? I'm gonna have a little bite. And you just start gagging like the second it hits your mouth. It turns out your baby's palate is much different than yours. That turns out to also be true for 20-year-olds and guys who are in their 50s. Because, man, I drink kind of the grenadine slushy protein crap that they sell at Dutch Bros, and it makes me vomit in my mouth almost immediately. But the kids love it. People wait in line.
Is it all sugar? Is that what it is?
It's kind of just super sugar. Yeah, it's. I don't know what the young folks like. It's like grenadine plus syrup plus whatever the hell they put in it. But it's Starbucks for the young types. Folks wait in line, and it's just a better business model. They do great. And so we'll see if they have something to report. Peloton scares me, Spencer. And as you know, I'm the greatest Peloton rider and probably on the planet.
That's right.
Yeah, I'm the Lance Armstrong of Peloton. Little known fact, it's not marketable. I'm hoping it becomes an Olympic sport before I die. But in the meantime, little worried about the stock tonight or tomorrow rather. I've sold half my position in it. Been long for quite a while. Since I was long for years when it was a cult stock. Managed to sell it once it broke the chart. It was not a hard one to see that it was going lower. But this is going to be a make or break quarter for them. And beyond just being a tell into the consumer, they did a lot of stuff that they need to do for a long time. They've cut a huge amount of expenses. They've ripped just tons of expense out of there. But that's not enough to make them a growth company. They added AI. They changed the app for the first time in forever. They made new bikes for the first time in forever. We'll see if that pays off. I'm pretty worried about the stock going in, and so I've turned my position, kind of pulled it back a little bit, and I might go for a nice long 45-minute soothing yacht rock ride just so I can make my way through earnings. But pay attention to them. Another consumer play, another also kind of bleeding edge consumer play. If the consumer is really suffering, they're not out there buying Peloton stationary bikes. They're actually just going outside. So, keep an eye on them.
Peloton in that group of COVID darlings and who hasn't come back yet, and that group is Peloton's arguably the poster child, but the Zoom comes to mind as well. You get some of these COVID stocks that got crushed and have come all the way back and made new highs, and some haven't. And
not many of them have. As we've had this conversation before, the Peloton is just a much better company than it was before. It was run by people who were not all that sharp, and they just kind of caught a flyer. It's the guy who was running it during COVID got margin called out of like a East Hampton's mansion because he put all the stock on margin at like $150, which tells you a little about his financial acumen. Ran stores, put his wife in charge of retail. There was a lot of stuff to fix. There was a lot of low-hanging fruit. They've ripped that out of there. It's going to be a viable company, but what we're going to learn tomorrow is whether they can actually re-achieve growth. They raised prices and they came out with new products both at the same time. If I were them, I would not have raised prices that way. It's going to be all about kind of the churn and whether or not, if the churn increases, which it will because they raised prices, but if that gets offset by just if the price increase itself gives them enough stick, then their cash flow will be great and they can actually be kind of a slow growth company again. That gets them acquired at $20 a share. If not, they'll just kind of drift around in the mid single digits and probably get acquired anyway. They're not going to go out of business, but they're not going to go anywhere fast.
All right, let's wrap it up here and let's talk about tariffs. What's going on here? I'm trying not to get bogged down in this stuff, but I guess that's why I have you. So.
You got to pay attention a little bit, right? It matters. Listen, it is the calcium markets. All of a sudden, you can see there that it's what that represents is all of a sudden they're betting that the Supreme Court is going to chuck the entire tariff construct, which normally that would be insanely bullish. If we actually put an end to tariffs, these consumer stocks would scream higher for all the reasons that we were talking about with kind of inflation being buried in there. Whether it's inflation, whether it is hurting the margins, it's a tax. Let's just call them what they are. So if the Supreme Court rejects them, that would in theory be bullish. People started to try to buy that, but then we remember the president that we actually have, who we elected, he's not going to take that for an answer. It's that just kind of increases the potential for volatility. What you need is the end of the shutdowns. The end of the shutdowns that are responsible for 1 million Americans not getting paid right now, that matters much more than the tariff. So I would encourage people, if you want to bet the Kalshi thing and be a degenerate gambler on things like that, knock yourselves out. But if there's a rally based on the tariffs being thrown out, the smarter bet is that Trump will come up with a different way to impose the tariffs exactly the way he wants them almost immediately. So this is much less of a market event. It got some chatter. I put it in here because I suspect that it's going to get more conversation as we kind of keep going along this week, and particularly once the Supreme Court gets toward its ruling. But either way, they're not going away anytime soon. That uncertainty is going to continue to weigh on the consumer group, which is one reason they haven't kept up with the rest of the tape for the most part this year.
Oh, I just realized you had these two charts here at the end. What's going on with luxury?
Luxury
shouldn't that be doing well? If this is
it should be crushing. Go down to the last slide there. JC sent me this. The luxury spending is not just kind of doing good. It's actually just screaming higher throughout October. People are buying fancy stuff. You would think that if that were the case, we'd be seeing better price action out of the people that sell, say, Gucci, out of the LVMH crew, out of just this super high-end stuff. Some of those cruise companies that I know you're a passionate cruiser. No one loves a cruise more than you. But those stocks have just been kind of annihilated. kind of recently we top ticked them a little bit, but those are more of an economic tell than anything else. You can see they've got a little bit of an uptrend there in the European luxury index. Again, that's going to be tariff news. You might see a spike on these stocks. They kind of the uptrend is not super great. It's not the best looking chart you're ever going to see, but luxury spending continues to be strong. It's a reason to be bullish on the retail in general. It's also a reason that we've seen discretionary stuff that people want continues to radically outperform stuff that people need, which is why Walmart, Costco haven't been able to break out this year. Amazon, they kind of did a little end around and went AWS and got that to work for them enough that it didn't matter that much. But it's the consumer staples have not performed well. They continue to not perform well. But luxury has been holding it together. So again, I speak for everyone when I say, yay, rich people. Thank you so much for supporting our economy and just our way of life.
All right, let's see what happens this week. Let's see what these companies, what Robinhood and et cetera.
Robinhood should be good tonight. That should be that is how people are spending their time. That has been a great stock since it's been public. It's been underrated. We'll see. It's always kind of fun to check them out. In the Coinbase of the world, Coinbase got sold off. It's been really hard for stocks that have performed well to find that next level. They've been sold off pretty hard, so you're late to the game. We saw that with Palantir, right? It's up, 1,200% over the last 18 months or so. But if you bought it 2 days ago, you're pretty well underwater. So these are watch them and see what happened type of stocks. But we're just getting into the meat, man. It's getting exciting around consumer land. November is it's Christmas. It's Christmas time.
We'll be talking a lot more about the holiday season here in the next few weeks. I do want to mention, though, if you want to get Jeff's free emails, the link is in the description. If you want to find out what stocks he actually owns and is buying, is selling, or maybe that he wants to own and isn't buying yet, or he wants to sell but isn't selling yet, he breaks it all down every week in the Macke portfolio. The link to that is also in the description on YouTube. And Jeff, thanks a lot. And next week we will talk more about the holiday season because I know you have thoughts. So.
I've always got thoughts, Spencer. And yeah, not to be braggadocious about those stocks that I own, but I spend a lot of time walking on the beach and I still live to the manner that I like. So it's worth checking out. I'm happy to share and I love talking about it and telling the story and spending time with you, Spencer. Yeah. And again, happy holidays to you and yours.
Happy holidays. November 5th. Happy holidays, everyone.
Absolutely. Of course.
Yeah. Okay.
Peace out, America. We'll see you next week.